Hi everybody, I'm here with Deputy Fund Manager James Timpson to see how markets have been performing in the first month of this year. James, hi, I dare say a rocky start to the year. How's things been?
Yeah, it has been quite a rocky start to the year, with volatility being driven by the big rises in inflation, interest rates, and the ongoing tensions surrounding Russia and the Ukraine. Inflation in the US is currently at around 7% according to the Consumer Prices Index, which is the highest it's been for 40 years. And this has led to plenty of speculation that the Federal Reserve may increase interest rates throughout the year. And if rates do rise, then the companies that will feel that the most are those with the highest valuations, and that will be those big tech stocks. And because of that, those tech stocks have taken quite a big hit in the last month. So companies like Amazon and Microsoft and Tesla's off 11%, Amazon's off 10% for the month. And the NASDAQ index as a whole, that's quite a tech-heavy US index, that's down 9% in January. So those companies with the biggest valuations have been hit the hardest in the last month. The global market as a whole is off around 4.9%, according to the MSCI World Index. But actually some markets which don't have quite so much tech exposure, such as the UK, have actually withstood the volatility quite well. So the FTSE 100 index, for instance, has just 1% IT exposure. And that has actually returned a positive return this month because it's got so much exposure to energy and banks, which have actually been doing quite well because a rise in interest rates would be quite good for banks. And with inflation rising, oil prices have also risen quite sharply, and the FTSE 100 also has quite a lot of exposure to oil. So it's actually been quite a topsy-turvy month. It's been really bad for some industries and actually not too bad for some others. And while the global equity market is down nearly 5% for the month, our growth fund is actually only off a little over 1% because we've got such little exposure to those overpriced tech stocks.
Yes, I understand with speaking to Gary last week that the Courtiers funds have proven quite defensive.
Yeah, exactly. And we've been talking for many months now about how we feel that those tech stocks are very overvalued. They had a very good run coming out of the pandemic because obviously tech became such a big part of our lives. But now with all this rising inflation, potential rises in interest rates, there's just been a bit of a correction. So those big overvalued tech stocks have just come back a bit. And because we've not been so exposed to them, we've held up against the volatility quite well.
Thanks, James. Looking ahead, is there anything you're expecting through February?
I mean, inflation's likely to remain high for the foreseeable future, at least until all of the various supply chain issues are resolved. Volatility is likely to remain high because there's still lots of uncertainty surrounding this, and of course the ongoing Russia-Ukraine situation. So we're just going to keep doing what we've been doing, really, and that's to maintain a diversified portfolio across various markets while also keeping an eye out for value opportunities and trying to avoid those heavily overpriced companies.
Thanks, James. And to close, I came across an article this week online asking the question, will equity income be the comeback kid of 2022? And within that, you can see that Courtiers UK Equity Income Fund through 2021 returned 28.8%. That's the second highest through the year. What are your views on equity? Will it be the comeback kid this year? What does that even mean?
Yeah, I think what it's referring to is obviously when the pandemic hit, companies quite rightly needed to preserve cash, which meant that many of them stopped paying dividends throughout the height of the pandemic. And because of that, income from dividends was obviously a lot lower. But now many companies have started resuming their dividend payments. I think that's why we could see a pretty good comeback for equity income in the coming years.
Okay, we'll keep a look on that. James, thank you very much once again for the insight. I'll look forward to speaking to you again next month. To our viewers, thank you. If you've got any questions, please let us know, and we'll put those across to the right people. All the best.